One. All right, what's up, guys? Good morning and happy Monday, the 25th of August. I believe the final week of August. Almost, yeah. No, yeah, final week. We got to finish up strong here. But all right, guys, couple quick sound checks. Make sure we are G to G. And we got Debbie, Miss Lorna, Mr. Mirza, team increase. All right, guys, hope you had a good weekend. And yeah, if we jump over here to the rankings, everything looks pretty good. Market is bullish. Indexes are strong. Dow Jones perfect score. The RSP a perfect score. Don't let me forget. There's a nice monthly squeeze on the RSP, which is kind of interesting. And then you got the IWM, the S&Ps, and the QQQs in last place. But you're in last place with a pretty good score. The pop we had back on Friday, I think took the Qs from, they were at like 25, maybe 30% of max strength. They pop her back into 70. So yeah, this all looks pretty good. That being said, the signals here on the futures, or maybe I should say the lack of signals, it's a little bit lame. QQQ futures, and from the daily chart to the 4-hour, 2-hour time frame, the hourly 30, 15-minute, 5-minute, 1-minute, everything's neutral. No active buy trigger, no active sell trigger. And then for the cash QQQ, they're kind of in the same boat. Okay, cool. We have a weekly buy, neutral from a daily chart down to a 1-minute. And I'm thinking potentially with NVDA earnings, pretty sure they're Wednesday, right? Let's go confirm. And yeah, that'll be Wednesday after the close. You know, things may be a little choppy today, tomorrow into Wednesday, Thursday. Then we all see what's up here with NVIDIA, which I think should be a big one. Now, the semiconductors, they're not your strongest sector. They are down here in 13th place, but 72%, 86 points. It ain't too shabby. And I still think into, let's call it Q4. This could be one of your bigger setups. The SMH itself, the mothership. That would begin, of course, with your monthly squeeze. You know, not tomorrow, not this week. Potentially into, call it November, December, January. If the squeeze breaks long, I think you're getting into 330, 350-ish. Shorter term, you have the 2-day squeeze. This one checks all the boxes, 15 points, good structure, the buy trigger. And then maybe based on NVIDIA earnings, we could get maybe a little something to do here with that daily squeeze. And, you know, for sake of conversation, let's say they gap NVIDIA up 10, 15%. Big old gap up in NVIDIA. You can maybe see your daily squeeze here on the SMH break long. That can get you into, we'll call it 305 to 310. But if they go and fire that daily squeeze, there's a pretty good chance they're going to go and fire that 2-day squeeze. That could get you into 311, 315. If they go ahead and fire that 2-day squeeze, since they're kind of already in that neighborhood, they maybe go and fire the monthly. 325-ish, maybe 350. But we could also see a situation where they hammer NVIDIA. The mighty has fallen, and yeah, maybe it's I don't think the SMH will fall apart here, but maybe you're getting a nice bigger picture pullback to buy that monthly squeeze. Could be a big one, get the popcorn ready, and then for NVIDIA itself, we would have the main thing here being a daily squeeze. And look, I would love to jump in and buy it. If they can turn 12 points into 15, if they can turn bear momentum into bull momentum, I want to buy it, and I would like to buy a lot. The backdrop being that big multi-squeeze in the SMH behind it. And then I think Broadcom is maybe next week. Broadcom earnings would be on the 4th, which could also impact the SMH. Broadcom with a daily squeeze here of its own. And then I'm pretty sure the same thing for the advanced micro devices. Yeah, little daily squeeze action. But again, today, tomorrow, into Thursday, if the picture can't change here, and look, you have the flush, the big pop, you're getting some back and forth here. If we woke up and we had a 4 hour, 2 hour, 1 hour, 30-minute, 15-minute buy trigger, I think you go into the open looking for a spot to get long. If it's a 15-minute, 30-minute, 1 hour, 2 hour sell signal, you may be looking for a spot to buy some puts. The neutral picture, to me, says keep your cash, wait for a better shot. Which again, maybe you got to wait until maybe Thursday morning. We'll see. We'll be here either way. But all right, there's the I think the main thing into the open, and then what else we got here? The XLY looks pretty good. Financials, the transports, XLB communications. Big tech could be down here in 19th place. Again, none of these are too bad. And I think this is maybe the first time in a while none of your sectors are bearish. No negativity to be found. And then what's also interesting is the RSP here. Right, you've got the S&P 500, SPX, SPY. That's your weighted basket. For those of you in my room, we talked about that on Saturday. Like 5 or 6 names make up 30, almost 40% of the entire S&P. But if you look at the RSP, that's your equal weighted basket. 500 names, everybody is equal. That looking bullish can point towards better breadth. Where there's times where you'll have a really strong QQQ, a pretty good S&Ps, and then the RSPs maybe just kind of sucking wind. That points towards a market where, all right, those more heavily weighted 5 or 10 names, they're pretty much trying to lead the entire charge forward. RSP sitting pretty here. Yeah, you got a good XLY, financials, transports, materials. Biotech pretty good. Utilities not too bad. The ARC ETF, gold. A lot of things trying to shape up. So for the chart of the RSP itself, now keep in mind, we could get a pretty good short-term pullback. The picture here wouldn't change. But along with your SMHs, your Amazons, your Googles, this has a really bullish monthly squeeze. You got one after the COVID, 2021 big squeeze and a decent push, $90 into $1.60. They pull it back, they chop it, they get the slingshot squeeze. Gives you another good leg to the upside. They pull back, they chop, another monthly squeeze. Here's why until that picture changes, anything I'm doing here as far as a short, it's a 4 o'clock in the morning, 15-minute scalp on the NQ. Monthly charts, weekly charts of the S&Ps, QQQ, the RSP. Here's your Russell. Check out the little Russell. That bad boy's got a big monthly squeeze. We bought a little Google back on Friday. Beautiful monthly squeeze for Google. We got the XLK already fired. No, better yet, actually hasn't even fired yet. Again, these are bigger picture timeframes. We could get a decent multi-week pullback. But that bigger picture, 6, 9, 12-month point of view, until that totally changes, I can't be all that bearish. If the SMH pulls back for a few weeks, can I find some decent shorts on maybe a 15-minute, 5-minute, 30-minute squeeze? I definitely could. My bigger focus on that pullback should be trying to buy that monthly squeeze. Right? If I'm real good, I can catch a couple of shorts on the way down, take that profit, parlay it into a bunch of calls. But we haven't had a pullback since March, where the board has actually flipped back to bearish. The worst we've seen is we've gone from bullish to neutral bullish. Neutral bullish means, yeah, you're in a bull market. Everything is just taking a little breather. Don't be in a big rush to buy it. Don't force to short. Be a little patient. And I'm being a broken record, but until that changes, what I think will keep happening is we'll get a little dip. All right, they'll pile in here to the short side. Come on in, water's warm. This is the end of the world, and then they pump it. You can see the game they're playing here on the 1 hour QQQ. Which if you watch the action from the ground up, um, it's a pretty impressive game. All right, so the last time we had a 1 hour sell trigger was all the way back here on April 20th. The Bears fight, they scratch, they claw, they pull everything back, they break structure, they shift momentum, they finally get their trigger. And the Bulls just kind of giggle, they bottom it, and you rally. We pull back to the hourly 200. We hold it. We pull back and we break the hourly 200. Right, come on in, Bears. Water's warm. Market's in turmoil. There's your bottom and another leg back into a brand new all-time high. Last week, we break it. We get our first set of sell signals since April. Come on in, Bears. Water's warm. And there's your short-term bottom. Like I mentioned, we don't have anything as far as a 15-minute, 30-minute hourly buy trigger. So I'm not trying to say, hey, jump in and buy a call for an immediate pop back into a brand new all-time high. But until that little dynamic changes, good way to look at it. Until you can finally get 30-minute, 1 hour downtrends, right? They break, they pop, they break lower. They pop, they break lower. Until you get that, it's going to be a tough market to short. If you are shorting, day trade it, scalp it, take it to lunch. But yeah, it's even when things are choppy, it's impressively strong. Could all change this week, but yeah, that is the picture for now. And then back to Google for a couple things here. So I took about a third of what I would like to buy on the Google December expiration 250 calls. Bigger picture play off the bigger picture time frame. Thinking here being if we get a good market into Q4, keyword being should, they should take that monthly squeeze, try to break it out, fire long, and then you're cruising towards 235, 250-ish. But if you look at the indicator here, we bought it on the white arrow. And that's a decent entry. It's a really, really good setup. Buying it up here around that 205 near the high, it's a decent entry. A great entry is back here on your green candle, right near the buy zone. Right, so the guy or the gal who bought Google on the first trigger, when you should have bought it, when I should have bought it, right, if they're long from maybe, we'll call it 179. They caught the entry on the first trigger. They're long from a $1.79. Before the breakout, before the squeeze even fires, Google's pushed a good 15, 16, 17%. So the that December 250 call I'm buying for about $3. Back on the first trigger, the call was going for 70, 80 up to $1. You catch it on the good entry, you're already up to maybe 3x. Now you've got a whole world of luxuries. You can take half your profit, you can lock all your profit, roll out into a further strike, you can sit through a pullback. Better yet, I think you can take your full size. All right, you're long from a $1.79. I think you jump ship on a breakback below the weekly mean. So you're taking on, we'll call it maybe 12% risk in exchange for what maybe is going to be a 30, 35% push towards that target. Great entry. Whoops. Come on back now. Right. Great entry. And then up here's a decent entry. So being that I took a decent entry, we've only got about 1/3 the size I would like. Therefore, if Google's more of a blow on the go, take out the high, break out, squeeze fires, and it's a $250 stock next week, I'm not going to cry. Maybe a little bit. If they pull it back into $200, 195, 190. I mean, here's the thing. It'll be a really, really bullish monthly squeeze all the way down to like a $1.70. Do I think Google pulls back a good 20% and change from here? Not really. But if I'm buying it near that 21 EMA, it's obviously less of a concern. So we got some Google for the diciembre, and then that's pretty much it as far as open positions that I got on my book. Let's go look at a few things here for Tesla. Big pop there on Tesla for Friday, and then Tesla's in second place. Very respectable. And what I'm trying to wait for a group trade would be that same green arrow on the weekly chart. We're not too far off from getting it, but getting close is no cigar. Same conversation though. If it'll feel like a quote unquote safer trade if you wait and buy Tesla on the 365, 370 breakout. And that's what a lot of retail traders will do, right? The breakout pattern, it's everybody's talking about it. It's a hot commodity. It's on your breakout scans, relative strength scans, 52-week high scans, every scan. Right? It's so strong up here. It feels like a safer trade. So does maybe Google on the all-time high breakout attempt. Oh man, here comes Google, super strong. Everybody liking it. I got to jump in and catch this breakout. I want to be the guy getting long back here. And then by the time you get the breakout crowd coming, the relative strength crowd coming, the scan crowd coming, you're long from back here. You're already sitting pretty. Therefore, in a perfect world, it ain't always perfect, but in a perfect world, if we can get our weekly buy trigger on Tesla anywhere near 325, 350, great setup, even better risk reward. But we have to get a white or a green arrow. Let's do the math here. If we're long from 350, right, I think we're wrong going to break back below the weekly 21. So let's round up and call it 12, maybe 13%. Right now, our target's around that 425-ish. That's about 20% and change higher. So I love those numbers. Really good setup. Structure, trend, momentum, checking all the boxes, all the pretty colors. It's a high probability moment in time. But with that kind of entry, I don't need a 70, 80, 90% win rate. If we can do both, I think we'll be in great shape. So I'm trying to be a patient fella here on, excuse me, on the electric eel. 3-day squeeze setting up and a 2-day squeeze setting up. Here's a trade for me. We'll maybe do something a little different in the room. But if I can get that trigger, I'm looking to buy the 400 calls for December. And I'm going to do that in a different account for my short-term account. I'm going to put a chart alert at 400. And the trade either goes to max loss or they trigger that alert, and I'll see what's up from that point. I'll babysit my 15-minute squeeze trades, 1 hour, 4 hour daily charts. These monthly, weekly time frames, got to let them work out. But all right, y'all, that is my story. I am sticking to it. Overall market looking pretty good here. Good breadth. You got the SMH bouncing back, QQQ bouncing back. Got some big squeezes in the background. But as far as our short-term signals, they are a wee bit lame. And they may be lame all the way into and through NVIDIA earnings. So patience this week. And yeah, I don't want to jinx it, so knock on wood. Knock on monitor. These monthly squeezes, weekly, the Tesla triple squeeze, the SMH, XLK, Amazon, Google. If they work out how I think they could work out, it should be a pretty good Q4. Again, don't want to jinx it, but I would love more than anything another shot for a Q4 like the one I had last year. December of Q4 being my first 6-figure month, which came from what? All right, here comes Apple in the absolute perfect weekly squeeze. That moment in time on a 15-minute, 30-minute hourly, I can work in some decent cash. They give me that on a weekly or a 3-day, I can work in way more. So that was about, I think, 25% of my first six-figure month. All right, here comes the one they call Amazon. The perfect monthly squeeze or weekly squeeze. Better yet, here's that Big 10 basket. The hell am I doing here? Here we go. So there's the weighted basket of the stocks I love to trade the most. These stocks I've made 95% of the cash I made in my career on. Collectively in the perfect weekly squeeze. So I think a chance we'll get maybe something similar. If we do, that's why I'm trying to be patient here in the short term. Go back real quick here to Apple. I could buy the current Apple weekly squeeze. Can I really treat it like it was back here and make that a good, profitable, repeatable process? I don't think I can. Back here, I had the perfect entry. This entry is just kind of subpar. Back here, we had 15 points. Now we have 10. From an edge point of view, there's 5 less things working in my favor right now than we had back here. Then factor in the bigger picture. You had a good Amazon squeeze, Netflix, Google, XLK, QQQ, SMH, Big 10 basket. Based on my account size, I could buy a couple $1,000 right here. Or I'm waiting for that, trying to buy 25, 30,000 bucks. Less trades, more size. But all right, folks, any questions you got for me in a chart request? We'll hang out here for about another 10 or so minutes. But yeah, anything you got for me, get it in the chat. And then folks in my room, folks in the main room, shall be taking you through the open. And if I have to, I will keep you patient. It's just a little too blue for my liking. Give me the green or give me the red. Hey, what's up there, Matt? Good morning. Happy Monday. Matt, I'm looking out into October, December. So here's what I found off a bigger time frame. If you're leaning towards buying the out the money contract, and you think that move could happen in maybe 2 months, I think you give it 4. Right. If I come grab a 400 call and I buy it for December expiration, and I wake up 3, 4, 5 days later and boom, Tesla's a $420 stock. There could be that thought in your head saying, damn, I wish I bought the 400 call for this week. Yeah, well, a little tough to predict $60 move in a couple of days. But if you're going with the out the money contract, you're still going to get a great bang for your buck. So I think that being said, if it offers a good asymmetric risk reward, if I think it could do it between now and October, I maybe want to give it between now and December. If that makes sense. If it's a 15-minute, 5-minute squeeze, that's much more of a, okay, we should go for it and we should go for it right here kind of thing. So I'm looking out to 400, 425-ish. But I think I buy a 400 for October or December. And really, guys, a big part of this for me is, like, do I think I can make good money on Google? Of course. But the other part of it is I'm doing it in a different account. And it's part, I think I can make money, part a good exercise in patience. Because as my account grows, as all of our accounts grow, you don't need too many of these per year. And I'm looking at Google saying to myself, man, if I took the entry I should have taken about 20% ago, before the breakout, before the squeeze fires, before the push towards that target, this is already a meaningful trade for my account. But what's happened in this 3-month window? You had the initial pop. From the top, they pulled it back a good 5%. They popped it again. You had a decent wick here. It's about a 3% wick. Point being, from that one point of view, it's a pretty straightforward trade. You treat it like any other time frame. Buy it near the buy zone, give enough time, and let the thing work. But what I've done in the past is I'll take that monthly, weekly squeeze, and then I'm sitting there watching the thing on a 15-minute, 5-minute time frame. It's like, dude, that makes no sense. They could pull this monthly chart back a good 20%. The thing's still going to be bullish. So any little break of support, any kind of noise you're watching on a 5-minute, 15-minute, it's a little bit irrelevant. For a bigger picture time frame, bigger picture trade, you should have given plenty of time to work. So again, do I think I can make good cash here? Of course. It's also an exercise in give a trade time, plant that seed, let it work out. The real kicker being here, I should have taken that 25, 30 points ago. So I can do better, and I will do better on the next couple entries. Hey, what's up, Yava? Thoughts on gold in USO? Yeah, where's gold fall? Gold is not quite top dog, but a good score. All right, the GLD. Yeah, good handful of squeezes here. So really important observation. If you have my version of the Squeeze Pro, or the free version, it applies to all of them, mainly for mine. Right now, we have compression from a really big squeeze. By default, that can give you a good source of edge. It doesn't tell you when, it won't tell you what direction, but it does tell you the energy is being built up. That can lead to a really explosive move. We got to fill in all the holes here, figure out trend, structure, timing, and direction. Right now, we have really good trend. So based on trend, it should break out. Based on structure, it should break out. You had that same combo, squeeze, trend, and structure, from December of 24 all the way into mid-January. Nothing happens off that squeeze until you get momentum. Good trend, good structure, big squeeze. Bear momentum, nothing happening. They turn momentum, right? Little pop higher. Big squeeze, good trend, good structure, no momentum. You're waiting. They get momentum, then they break it out. Now, the current 2-day squeeze here, this started printing back in late May. From the get-go, you're lacking momentum behind it. You've got all the other pieces. Beautiful uptrend, 21 above the 50, 50 above the 200. Moving averages point in the right direction. EMAs are stacked positively. It's a Lamborghini. We have no gas. So we keep waking up, jumping in the Lambo, trying to start it. It's not going to start. If we can get some gas in the thing, MACD back above zero, then they can call for a breakout. And my approach is very much, I want to get paid as soon as possible. I want to have that discipline, have that patience to let the idea work out. But from an alignment and a timing and direction point of view, I want to get paid quickly. And that lack of momentum I have found makes that job so tough. Because it looks, it feels, and it smells like a breakout. And they'll paint the picture of the breakout, right? Here comes gold, and they work it back in. Here comes gold, no momentum shift, back in, little pop, no momentum, back in. When they can finally get it, it becomes an easier trade. Same exact conversation for your 3-day squeeze. From the get-go, you get the MACD hanging out below zero. Makes it a little bit like that 3-day squeeze. November, December, January, February, MACD bars below zero. We're looking at it thinking, man, look at the structure, beautiful uptrend. Squeezes and uptrends, they should fire long, right? They do, and you get full alignment, trend structure, and momentum. The Bitcoin weekly squeeze. Brand new squeeze. Very strong trend behind it. Really good chart structure. July, August, September, October, November. Now we get momentum. Now we get the white arrow trigger. Now it's an easier trade. Then they pull it back, they squeeze it, waiting on momentum, waiting on momentum. Here comes momentum and a little lift. So what do I think of gold? I think gold could be poised for another leg higher if momentum can support that move. If the picture remains on, same thing here for your weekly squeeze. Weekly squeeze begins, they give it a fresh bull cross. Weekly squeeze begins, they give it a fresh bear cross. Fresh kick higher, and now you're being held back a little bit. If they can turn momentum, they might want to go for it. But if you have that combination of good trend, good structure, big squeeze, no bull momentum, this does tend to be your best case scenario. They don't break it down, they don't crush it, they don't take out support. The squeeze won't break short. It's just more of a glorified chop fest for a few weeks, which can make for a lot of physical and mental capital tied up. Where Google on the weekly chart from a few weeks ago, will the entry always pay you? No. Nothing will in trading. But when the white arrow shows up or the green arrow shows up, right here, back here, back here, it says probabilities wise, here's your chance to jump in and buy me. And I'm going to push you into a profit as soon as possible. Can't make you a guarantee or make you a promise, but I've got the variables. Energy built up, momentum behind it, really good uptrend, good chart structure. I've got the variables that can lead to the immediate pop. So for gold, I think you're waiting on the momentum. All right, and then, so Joe, that's just based on a modified MACD. If you put the default MACD on your charts, you're like 70, 80% of the way there. In terms of that one momentum point of view. Oh, yeah, we have Labor Day. That's right. So do I try to go to the beach this weekend? After class, of course. All right, guys, last one here will be TSM. Okay, good call out here. Good example of the same conversation. All right, huge rip, super, super strong, pulls back, brand new squeeze. And the old adage is squeezes and uptrends fire in the direction of trend. And I think they tend to want to do that when you have alignment. Back here, you had really bullish trend, really good structure, never had momentum. Now, TSM hasn't fallen apart, gotten hammered, squeeze hasn't broken short, but it's the kind of picture you can get caught up in when there's no momentum behind it. And they flush it, they pop it. Think about a breakout, they pull it back again. They think about the breakout, they pull it back, they pop, they dip, they pop. Me personally, I don't enjoy any of that. What I love is a Shopify. Okay, can I buy you on that candle? And then can you reward me with a little something, something like that? Again, it won't happen every time, but put yourself in a position where it can happen. And think of that over the course of a big series of trades. If it can go in your favor sooner rather than later, a lot of that fear, the FOMO, the emotional noise, it can be a little bit more subdued. Where I've had trades, Bitcoin weekly squeeze being a great example. It's not even the open loss. It's just more so that mental capital. Right? I've got to show up every day for like 12, 16 weeks. And this thing's just sitting there on my open book. Popping, fading, popping, fading. Mentally, you're tied up there. You may be missing something more aligned like that candle. You're tied up here 8, 10, 12, 14 weeks. Couple things that have been going on making that nice move. But all right, guys, I am late to my next shindig. So folks in my room, folks over in the MTT room, I'll catch y'all in a minute for the open. For the rest of y'all, thank you again. Much appreciated. And yeah, position of patience here for me. We have some Google for December. And they could pull the thing back a good 10, 15%. I do want to buy more. Bigger picture time frame, bigger picture trade for the short term. Yeah, get through today, get through NVIDIA, and then maybe things will provide a little bit more color up here. For now, we have the Monday morning blues. Thank you guys again. Go get them, and I'll see you here same time, same channel on Wednesday. Adios.